Hello folks, LA Little here. This is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time. We ask ourselves just the one question: what happened today? What does it tell us about the coming days? Do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, Sunday channel LA Little. If we look at what happened today, it really wasn't much. We had a mixed market. We had the Fed minutes come out. They basically told us, hey, they're not gonna do anything in June. Of course, we kind of knew that probably was the case. It more or less confirmed that that's the case. So now everybody starts talking about Friday when Yellen's going to speak, and will she push these markets back down like she did the last time she spoke? I think that's going to be the question now. You just move from one event to the next. It looked like today wasn't going to do much of anything. So the listed issues down a little bit, right? NASDAQ NDX up a little bit, same with the Russell. Nothing else happening. Elsewhere, bonds, they did go up today, but barely, and they just barely held in that range again. The dollar up again. Dollar looks like it's run out of steam up here. Oil got a decent little spike today. Gold and silver both traded back up just slightly, right? Nothing major. So that was the way the markets shaped up with respect to what they look like. Let's take a look at the indexes. And it's here on the indexes that we finally have more of a mixed picture than we've had of late. Of late, there's been no signals whatsoever that this market was going to try to pull back. Well, tonight you actually do have one here. You go over, right? You go over back under yesterday. You have less volume. That's a 2-bar. Well, it's actually not a 2-bar. It's an an over-under. So in other words, you're not extended enough to call it 2 bars, but you're over and back under. So this actually today also came back in and started doing the bullish retest regen off this prior swing point high that was broken. And so when you come back within 6 bars, you can get to the bottom of the bar. And so, and still nothing be wrong with it. So that's going to be, what one has to look at is, will this thing gravitate back that deep or not? If it does, it's like we talked about not that long ago, that potentially you set up the nested ABCD structures to get this up to the target price that it's trying to get to. So S&P finally given a signal that it wants to pull back, but it's mixed. And it's mixed because if you look elsewhere isn't saying that. For example, if we go to the NASDAQ composite, yeah, it's a doji, slightly more volume. So that one doesn't say that. If we go to the NDX, another doji, slightly more volume. And finally, if we go to the Russell actually gives the same picture as the S&P, gets over the high, back under it, kind of getting extended, but I wouldn't call it extended yet. So I'd call it just a over, under, probably some sort of a pullback. And of course, this one's a little different. There is no retest regen. Remember, this was coming into the swing point lows. It was doing a bearish retest regen. And so in other words, you're coming up, it's going to try to regenerate lower. And so if you're looking at a larger picture here, right, the scenario is like that. So that's the Russell. The Russell probably is the one to really to watch, because if it starts to back off fast and heavy and gets back into this bar, which was the breakdown bar, 1242, then that might be telling us something. But right now, it looks like they're set up to try to pull back a little bit. When I come back, we'll look at the subscriber question, then we'll look at some world indexes and see if we can make any sense of anything else out there that gives us a clue as to what's going to happen tomorrow and Friday. I'll be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
Okay, as we come back here, a viewer question tonight has to do with PTC. PTC is a software company. They do software product solutions. You know, I looked at their PE is not too high or anything, but their revenues, their earnings, things like that, it's nothing spectacular whatsoever, but the chart looks pretty good. Just stair-stepping higher, nice volume spurts on each of the spurts higher. I got another one today. It looks like earnings maybe just came out. I saw some earnings news on the recent news list. But yeah, it's stair-stepping higher. The question is, how far can this thing go? That was the member question on both a short time and an intermediate term time frame. And this thing's breaking out on all time frames, and we'll look at that as we switch between the time frames. As far as how far can this go, well, the first thing you see is an ABCD structure that just completed. So you've kind of already done it. If you look at it a different way and you say, okay, I've got some sort of a range here, so let's take the range and say, okay, so what does that range look like? Well, the range projects higher, right? So from a range perspective, you just did about half of what you're probably going to be able to do, something like that. So a little bit farther up. So you have one saying, hey, it's already done it. The other one saying, yeah, it's got a little bit more it could go. If I look at it on the weekly time frame, here's the breakout, multiple swing points, multiple time frames, assuming it holds. On the weekly time frame, right, there's definitely more to go, because if you look at the ABCD structure here, and wow, I thought there was a pullback there, but it's not actually. That is the A so far. You don't even have the ABC. So we don't even have a B yet. You just pulled over. A retest regen would bring you back into here, and maybe that would be the ABCD up. So right now this looks pretty strong. The thing that doesn't look strong is as this thing keeps climbing, the volume keeps falling. That's not ideal, for what you want to see. And if you look at it on the yearly, the monthly, it's been consolidating here for quite a while. And that consolidation, if you let's just take this bar, you're looking at 32 up to about 39, almost 40, so about $8. $8 on top of that would get you up to about, what is that, 48 or so, right? So, you could have another $8 move over time. Now we're talking about the monthly charts here. So let's go back now and look at it on the daily, and the thing I want to stress here is, the stock chart looks fine. I don't see anything wrong with it other than, on the weekly you're seeing, declining volume as this thing's going up. The issue here is not the stock. The issue is the market. The market is not supporting breakouts. Typically, multiple time frame breakouts, right, carry a fairly high probability of continuation on the highest time frame, 2 to 3 bars. And in this case, it looks like it's going to at least be potentially on the weekly, so that would be 2 to 3 weeks of extension, which certainly could take you higher. In other words, you could flatten out a little bit and then move up some more. The problem is the market doesn't support it, and so you have a stock that's tugging against a market. So let's just take an example and say the market wants to go down the next 3 days. Well, how far is this going to be able to run? Market's going to be pulling it back. So the issue isn't here. The issue is with the market. Does the stock chart look good? Yeah, it does. I personally, if I were trying to trade this thing, I would try to trade any kind of a retrace back into this bar. That's the way I would try to trade it. So I would be looking, you've broken 2 of them here. You got a $40 point there. You got a $38 point here. I'd be trying to get it somewhere down in that area. That would take some of the risk off of it. You've got this nice big spike up here. That's your big support bar at 37. So, stops could be around 36. You get in around 39, you're risking about 10, a little less than 10%, and you're shooting for, another 4 or 5 points to the top side maybe. And, that's a pretty good reward risk. It's not too bad. Okay. All right, let's come back and let's take a look at the final thoughts here and where's this market going to go. So as we wrap it up here, the issue isn't what's happening in our market. It really is what's happening elsewhere, primarily with the currencies and with the bonds. And if we look over just at the world markets, we can see that the CAX has moved back up into the retest region up here. We thought that might be the target it was going to try to get to. Sure enough, here it is. It's pushing up into it. It's got no volume as it comes into it. That looks like a failure just asking to be actualized to take place. The good thing is that this thing is definitely sideways, right? Nice strong sideways consolidation at these higher levels. And when I say higher levels, of course, I'm saying pull this thing back, look at it on a weekly chart. You come a big long run higher. Now you consolidate. Nothing wrong with that. So the CAX right at a point where it looks like it might want to try and fail. The DAX really didn't tell us anything today. All it did was an inside bar. The one thing it did do, if we look at the price yesterday and get the number on it, what is that, 11,873. Today was 11,871. This breakdown bar, 11,885. So it comes up towards the breakdown bar. It kind of stalls there. And there's a lot of resistance up in this area. And at the same time, this is still trying to do the bearish retest and regenerate lower. And so you have a very large, I wouldn't say large, but you have a ABCD structure that's come back up on the C point to where you're not going to have much extension, but that could get it in a little deeper if in fact this turns and regenerates lower. Don't know that it's going to do that. I think that you're going to find some support down here as you come back, but the point is here is that you're at the failure place and it's running out of juice as it gets there. That's the European market. If we look over at the Hong Kong market, Hong Kong can't really get anything going either. It's still consolidating. And if we look at the Japanese market, Japanese tests the highs and fails. And what I mean by that is you go over this high, you have less volume, you close underneath it. That's a test failure on price and volume. That usually says you're going to work back the other way. And it's extended, so it should. And finally, if we look at the Shanghai market, Shanghai goes into the breakdown bar's high, 44.87, gets over it, closes underneath it just barely. Well, not just barely, but closes underneath it. That also is a test failure. And so when I look at the world markets, Europe's setting up to fail. Asia's already failing and trying to come back on 2 of the 3 markets. And so if we come back and look at our OX markets here as well, the other thing that you're going to see is the currencies and the bonds. So let's go look at those, and we'll start with the currencies, and we'll start with the dollar. Dollar pops up. Dollar's coming into this swing point high. That's the gap down, breakdown bar basically. Actually, it was the bar above it. But still, that's the significant bar. 25.14 gets to 25.17, goes over it, back underneath it, has less volume. That's a failure too. So currencies echoing what we're seeing in the overseas markets. And finally, if we come back to one more thing, and that's the bonds themselves are just barely hanging on, and I mean by a shoestring. These guys, they push back up yesterday and then fell. They push up again today, do a doji. They do stay inside this range, but I'm talking just by the slimmest of margins. This still looks like a toss-up. And finally, for good measure, we have a huge sell-off in the transports tonight. And the transports come down, they come down with volume. They're coming after that low. And remember, the transports are getting ready to break out these lows. They held it the last time they tested it. We're on Wednesday. We've only got 2 more days. Volume's expanding. It's underneath it. If it stays under it, target's going to be back here. That's the October bar, the high of the low, which is the high volume bar at the low. Transports would be the first of the majors, and given the Dow theory as well, a significant sector saying, hey, something really is wrong here. So ABCD structure here, if it actualizes, will take it down towards that area. There's your price points, and you can see how it would take you into this bar. That's the way it looks tonight. Looks to me like we're going to head back the other way, and I'm really curious to see if the Fed chairman throws a little fuel on the fire come Friday. Have a great one, folks. Thanks for joining me. Take care. Good night.